Hey everyone, thanks for jumping back into the cryptoverse. I've been waiting for this day for a long time. We're launching Bitcoin letters. So I've actually been working on this report probably for the last 3 months or so. I've been putting a lot of content out there, been getting some constructive criticism, trying to improve the charts, improve the discussion, and now I think I've done so, and I've put it all in a report. So if you guys want to find this report, just go to intothecryptoverse.com and you can see we have reports, charts, and videos. So let's first just go to reports, and it says, you can see this one is Bitcoin letters, but really I have reports on a number of different coins on this page. So go ahead and click on Bitcoin. This is the one I just released, and if you follow this, you'll be able to pull it up. And if you view it, then this is basically what you're going to be getting. So you're going to find a 21-page report that goes through all of these different charts. We've made some new charts, and we look at a lot of different polls, and we make some conclusions. So I think this is going to be useful to everyone. Please let me know what you guys think in the comments below. So let's briefly just look at this report, just so we get an idea of what it covers. So originally we just start with a general abstract about what this is and what it's not. So what it's not is financial advice. There's no financial advice in here. We just look at things from a mathematical perspective. So my bachelor's degree was in math, and my PhD was in nuclear engineering. So I'm looking at things more from just a mathematical standpoint rather than, how can other people use this to make their own trades. That's not the purpose of this report at all. And in fact, we don't, all we look at is the math. I don't take into account, other things like leverage trading or black swan events or future contracts, anything like that. None of that is taken into account. Halvings, I don't really take those into account. I just assume that the price data reflects the halvings. So keep all of that in mind. It's always important to do your own research into any project that you are interested in, and it doesn't have to be cryptocurrency. I mean, that's just a general rule of thumb when you're entering into new projects. So the idea behind this report is it's going to be published every quarter. So Bitcoin letters will be published in January, and then the next edition will be out in April, and so on and so forth. We will have In February, we will have the first edition of Ethereum letters, and then in March, we'll have the first edition of altcoin letters. So Ethereum letters is pretty straightforward. It'll just be the more or less the same thing as Bitcoin letters. Probably not quite as long, just because it hasn't been around as long, and therefore there's not as much to analyze. And then altcoin letters will be altcoins that I want to talk about, and I'll make a report on those. So there'll be several of them. It won't just be one. But we'll focus on different altcoins. That one will come out in March. So this report is free. This first report is free. In future editions, I will still make free versions of them. We'll have abbreviated reports. They won't be 21 pages. We'll make an abbreviated report for free, and then we'll have a more extensive report. For the people who are supporting me on my patron page. So again, I think free reports will likely be suitable for most people. But if you really want to dive into all the different charts and all the different discussions, then you can support me on my Patreon page. So after the abstract, where we talk about all this stuff, we have an introduction, and then we go into the return on investment for Bitcoin. We look at, first we just show the price data on a logarithmic scale. We look at time-denominated ROIs, so we look at the 1 year, the 2 year, the 3 year, and the 4 year. And this assumes that if you buy and then sell exactly 1 year later, what would your return on investment? What would it have been? I like to draw some theoretical imaginary lines. So obviously these imaginary lines don't actually mean anything. We're just showing that. It seems that the 1 year ROI is kind of coming up to this point on this downtrend line right here. So this could be a potential indicator for looking at price changes in the future. We have the 2-year ROI, and then of course the 3-year and the 4-year, and then we show all of them on the same graph. And again, I do provide a lot of discussion. We also look at the 90-day ROI and the 1-year ROI, but we take monthly averages of them. So this is more in tune for the people who like to say dollar cost average several times a month and just kind of want to know on average, or looking historically, what would your ROI have been had you waited, say, 90 days and then sold, or if you waited a year and then sold? What would your average ROI have been? And you can see there's a bar for each month of the year at each yearly tick mark. And actually, on this chart, this one you can see we also have this, pretty much downtrend line where we go from top to bottom to top, bottom, top, bottom, and now we're starting to move back up potentially. However, this line, we're just drawing the bottom to the top, and we don't know where the top is. I mean, if the top's way out here, then this line will actually go like this, which kind of could make sense if you're thinking of how it goes down fairly vertically and then back up, and then this one the slope is reduced, and then the slope going back up is reduced. So maybe the slope going back over here is also going to be reduced as well. Obviously, we can't say for sure. And one of the themes in this report is the argument between say a lengthening cycle and the 4-year cycle, and we talk about evidence for both. We're not going to completely discount one theory over another. I do think there's more evidence that the cycles are lengthening than evidence for a 4-year cycle built around the halvings. But I do know that almost half of you would disagree with me based on a poll that I carried out. So that's fine, and I like to hear people discussing their viewpoints. The truth of the matter is none of us actually know what's going to happen. So it's probably good that everyone, we don't pretend like we know. We'll just, we look at evidence, we try to make just conclusions from that evidence, but we don't get too committed to any one theory, because that can leave you with a bag that you don't want to be holding. So we also, so we have time-denominated ROIs, and then we also have ROIs, or that we look at the time needed to realize certain ROIs. So this one shows the Bitcoin price versus time, and that's this black line over here. And then our secondary y-axis, which is also a log scale, shows the return on investment time in days, and this one's for a 2x return. So if you think about it, what it is these blue dots correspond to each price point on that vertical line. And if you just say pick a point, let's say we pick this point back in 2013, and then we scroll up here, we can see that this point, so a little over 1,000 between say, or let's just say a little over 1,000 days it took to double your investment. So if you had bought at the peak back in 2013 at around $1,100, it would have taken you a little more than 1,000 days to double your investment. Whereas timing your ROIs, or timing your investments, rather than purchasing Bitcoin when it's up 100x or something, you can actually see 2x ROIs in say 10 days. But notice that these the bands come down. Where the bands come down to, it's getting higher and higher. So originally you might be able to see a 2x ROI in only a few days. Now it's getting to up here. It was around a little over 10 days. And then most recently, this band that we printed in a theoretical fourth market cycle, it took almost 100 days. So, we are moving up this logarithmic scale over here. And you should note that the grid lines correspond to the primary y-axis, not the secondary. Here we show the same thing, but for 2x all the way up to 100x. That's just, we have plenty of discussion in the report about it. If you want to dive in, feel free. And then we also, just for completeness sake, and so that you can better see some of these lines, we just showed 2, 10, 50, and 100. So the time to see those levels of return. One thing that's interesting, and you won't be able to see it on this chart, but if you squint your eyes, you can see a tiny point right here. What that indicates is that if you had bought, at 3,100 or so when Bitcoin hit its bottom, if you had bought then, you actually could have seen a 4x ROI. So despite the fact that Bitcoin is down some 65% from its all-time high, you still could have experienced a 4x ROI in if you had bought at the end of 2018 and then sold sometime in the middle of 2019. So while time in the market is very important, timing the market in cryptocurrency, where it's very volatile, is also, in my opinion, very important. Because if you invest at the peak, you still could see a good return on your investment over many, many years, but you're losing a lot of time value of your money. So keep that in mind. We look at return on investment from market cycle bottom, from the first cycle, second cycle, third cycle, and then this is assuming we're in a fourth cycle, which assumes that 3,100 was the low. You can see that the time to reach each market cycle peak is getting longer, and so we might expect this one to get longer, and we just drew in a simple projection here. And the only thing I can guarantee you about this projection is that it's wrong, because I'm sure the price is not going to do exactly this. Now, you should note that the data, the Bitcoin price data I have that I find reliable, I only have from, say, the third quarter of 2010. So obviously that begs the question, well, if I had added in, another year and a half to 2 years of price data, then this curve would actually be shifted over about 600 days or so, which kind of is maybe where some people, that's one way I think that people might understand, say, a 4-year cycle. Another way to potentially understand why people think it might be a 1-year cycle is to assume that this first cycle here and the second cycle are actually part of the same cycle. So basically going from here to here was the same cycle. So if you do that, then your first cycle looks like this. But remember, this actually starts third quarter of 2010. So in fact, if you were to go all the way back to 2009, it would actually extend all the way out to, say, 6 years. But you can imagine that if people think that the first and second cycle were actually the same cycle, which is a possibility, I'm not going to say it's not, and then maybe if this is the second cycle, then maybe that's where the 4-year cycle theory built around the halvings is the evidence is coming from. Now, if this were the case, it's kind of, I would say it's kind of bearish, because you can see the ROI from the first cycle would have been 10 to the fourth, and then the ROI from the second cycle would have been 10 squared, so 100. So, if you were to continue to extrapolate that down, if we were to even drop to another 2 orders of magnitude, that means Bitcoin's not doing anything. And if we say just drop 1, then that means the ROI from market cycle bottom, if it was 3,100, would be 31,000. This is the case. This is the bearish case if Bitcoin, if 3,100 was not the bottom. This is the bearish case, which means we're still in the third market cycle, and we would have to come way over here, to see some other bottom before we would start the fourth market cycle. I don't think this is likely, but let's just put all the, let's put everything on the table and see what the data tells us. So one of the things about this stuff is that, it can be really hard to to know where these market cycle tops are and market cycle bottoms. Like, what do we, how do we know when to sell, when to buy? A lot of people have implemented various dollar cost averaging strategies where you just put in some nominal amount every month. And I think that can actually be really lucrative for a lot of people, and I know it has been. There are other ways that you can go about managing it. You can look at risk. You can define it in any number of ways. You could define it as, say, the percent difference between the instantaneous price and your favorite moving average. The downside of this is that since if you look at these charts up here, you can see that the ROI is decreasing, and it's taking longer to see the diminishing ROIs. So it's like, not only do we see lower returns, but it's taking longer to see those returns as well. So it's kind of a double whammy. So just looking at, say, the instantaneous price versus your moving average isn't going to account for maturation of the asset. So we do have, I did make a risk model that does take into account the maturity of Bitcoin, recognizing that the ROI is decreasing, and we've plotted, here we have the price of Bitcoin on a log scale, and then we have a risk metric that goes from 0 to 1. Here is the same thing, but I just color-coded it into the price data. So basically, when it's dark blue, it's historically a great time to buy, and when it's dark red, it's historically a great time to sell. Now, you might say, well, Ben, that's awfully convenient. You fit this data in hindsight. Who's to say that it's going to work in the future? And that's a fair point. So I did feed in, some dummy price data, what I think could theoretically happen over the next 3 or 4 years, and I put that in here. And you can see that this is how that risk model would respond if the price of Bitcoin did something like this. So you can see, even though the ROI would be decreasing, Note that, compare, say the peak here was say $1,000, and then here was, or it was like 1,100, and then here was 20,000. So it was basically a 20x, and then from here to here would only be a 5x. Despite the fact that it's only a 5x, we can see that our risk indicator would still get into that 0.9 to 1 phase. Now, there's clearly no guarantees that we would make it to that point, which is a potential reason why you should come up with a dollar cost average selling strategy, just like you have a dollar cost average buy strategy. A lot of people think like, okay, let's dollar cost average our way in, but then it's like when they sell, they have to sell everything. They can't just sell portions of it. So I guess my argument is, why not? Why can't you sell portions of it? First, I think the first key thing is admitting to yourself that you're not going to hit the top anyways. I mean, even if you were to try to sell the top, you're almost assuredly not going to sell it at the top. So why not dollar cost your average away, your way somewhere around where you think the top might be? You will have a much better chance of selling at least some portion of Bitcoin near the top if you do it like that. So one method is, you could say, if you say say you have like 1 Bitcoin when the risk gets to say above 0.5. So the way this works is basically I'm saying if the risk is between 0 and 0.5, you buy, and if it's above between 0.5 and 1, you sell. You can come up with whatever risk you want to, whatever risk indicator. If you want to use this one, which I'm not saying you should, but if you want to, I mean, you could say, okay, I'm only going to buy when the risk is below 0.2, and I'll sell when it's above 0.8. You could do something like that. Anything you want to do is obviously fine. I think the important thing is to come up with a plan while the markets are really not doing a whole lot, because if and when another bull run occurs, you don't want your greed to keep you from realizing some profits. I think one of the saddest things to think about is there are some people who are the smart money that come in when there's fear in the market, but then they never sell. And then people, say dumb money, come in near the peak, and they get in and get out quickly, and they actually see better percent gains than the people who invested 2 years before. So don't let that happen to you. If you are the smart money coming in, if it turns out in 2 or 3 years, hindsight shows us that 2019 and 2020 was a great time to buy Bitcoin. If that's the case, don't just sit on your. Not that this is financial advice. I'm not going to just sit on my investment at that point. I'm going to start realizing some profits at that point. You could also weight your buys and sells so that you're selling more as the risk goes up and buying more as the risk goes down. So let's say you wanted to invest X here, then 2X, 3X, 4X, 5X. So if you say $100 here, then you would invest $200 if the risk came down to here, 300, 400, 500, and then on back up. You could also create a gray region where maybe you buy, maybe you sell, and you could make it dependent on the direction of the risk indicator. So if the risk is going up, you buy into momentum, and if the risk is going down, you sell out of it. So that could be one potential solution. Some of you might think, well, I would never want to sell my Bitcoin when the risk is only 0.5 or 0.6 or 0.7, and that's fine. I mean, if you want to have that risk tolerance, that's fine. The nice thing about having it where you sell, say, a small portion, for instance, if you were to say sell if you accumulated 1 Bitcoin when the risk got to above 0.5, and then you add y plus 2y plus 3y plus 4y plus 5y, you add that up, you solve for y, you would get 0.067, so then you could sell, say, 0.067 Bitcoin here, then 2 times 0.067 here, or 0.133, and then 3 times, 4 times, and 5 times. That's just one option. You could weight it however you want. This is just one way to think about managing your risk. If you want to sign up for the Patreon channel, as I mentioned, we will be offering free abbreviated reports in the future of all these things. We'll have a free abbreviated report of Bitcoin, Ethereum, and altcoins. We want to make sure that people can see the content, but at the same time, there are some people that really want to dive deeper and they want to support the work, and so because of that, in addition to offering abbreviated reports that are not 21 pages, and would actually probably be more suitable for a lot of people, we're also going to offer longer reports that will require a monthly subscription. to view. And again, it's just so there's something for everyone. So if you want to check that out, you just check out my Patreon channel. I am into the cryptoverse, and you can actually see if you click this link in the report, it'll take you there. So after that, we talk about logarithmic regression. We talk about the benefits of logarithmic regression and the limitations of it. Logarithmic regression is great, I feel like, for looking at short-term moves. And when I say short-term, I don't mean day-to-day. I mean maybe a few years. Maybe through the next market cycle, they can be somewhat informative. But the issue is that as you move on, they actually tend to fall below what earlier cycles would predict. So here, we've actually created several different bands. And you can see from every peak to peak, we're essentially following 2.5 log lines. So if we were to fall another 2.5 log lines into the next peak, potentially in 2022, 2023, then it would put us at a little over $100,000 per Bitcoin. Here we've drawn in peak to peak percent gains and valley to valley percent gains, or bottoms, whatever you want to call it. And then we noted, okay, well, what if you exclude bubble data and only fit non-bubble data, which is obviously somewhat subjective? Then you get this line, and then let's add a tolerance level and note that, if you ever buy Bitcoin, historically, if you had bought Bitcoin in this band, it was only, you would have been seeing profits historically a lot sooner. If you buy outside of this band, then it could take years and years and years to see those profits. Again, this is historically speaking. We've also looked at some volatility here, so this graph leads into this section on volatility. You can see that the price, the relative difference here between the price and this primary band is decreasing, so we're getting closer to the band. And this is one of the limitations. Up here we're more or less above the band. Here we're kind of in the middle of it. Here we came down to the middle of it. It's possible that we come down to the bottom of the band in this market cycle. It's hard to say for sure. But again, to come down to the band, price could just stay constant for, if price were to stay steady for 6 to 12 months, then it's not that hard to imagine being, riding up the bottom of the band as opposed to being in the middle of it. Price does not have to go down for that band to kind of catch up with the price. So you've looked at volatility by looking at the average price every year, the minimum and maximum, and then we also plotted the maximum minus the minimum over the minimum times 100 to get a percentage, and then somewhat dubiously I extrapolated that out and drew these trend lines to see what annualized volatility defined this way might be. And potentially we could see volatility as low as 10% in 2025, 2026, but still might be as high as a few 100%. And it depends on whether, if we're in an accumulation phase or a bear market or a bull market. It kind of depends. You can see that it would ultimately predict a lower annual volatility of 1% by 2035, but it could get up to 25% in 2035, just in one calendar year. And then the upper bound volatility in 1 year might reach 1% somewhere, 2047 or 2048. Now, I'm sure I'll get a lot of comments about that. And, this is not meant to be an exact science. This is just extrapolating out with what data we have. So, feel free to take that for what it's worth, even if you don't think it's worth anything. So then we look at moving average derivatives. So we're just taking the time derivative of the 50-week moving average and the 100-week moving average. You can see that I have these plotted here. We're dividing by the price so that we can compare them. You can note that with the 50-week moving average, if we differentiate it, once the slope went above 0, which means the 50-week moving average is increasing, it went from decreasing to increasing. Once we cross this line, it stayed above that line until the next bear market. Now, that doesn't mean it's going to stay that way this market. If lengthening cycles are true, and let's say the price of Bitcoin were more or less to stay constant for the next year or drop, then we would expect to see the 50-week moving average start decreasing again. This is just, we're just looking at what has happened in the past. Another thing that people often ask about is, well, how does Bitcoin behave with respect to other indices? So we look at the S&P 500. If you were to take the correlation coefficient using this equation between both of these curves, you would get 0.78, which, 0.7 means they're strongly correlated. Now the issue is that they're both just increasing more or less over the last 10 years. Note that Bitcoin is on a log scale, whereas the S&P is not. So Bitcoin is drastically, the ROI there is drastically greater than the S&P. But what would be more informative is to say, look at only Bitcoin bear markets. What was the S&P doing then? Well, if you look at the correlation coefficient between the first bear market, it was 0.48. The next one was negative 0.7. So 0.48, you can see that as Bitcoin was going down, the S&P was also somewhat going down, but it wasn't strongly correlated. During this bear market, the correlation coefficient was negative 0.7, which means it's actually negative correlated. So Bitcoin was going down, the S&P was going up. And this was a strong correlation. The next one was negative 0.12, so while Bitcoin was going down, there really wasn't a huge correlation with the S&P. What does this tell us? So far, there hasn't really been a drastic correlation between Bitcoin and the S&P 500. Remember that Bitcoin was born out of the 2008 recession. The Genesis block was January 3rd, 2009. So we don't really know what would happen during a recession. One argument is that people would likely liquidate their high-risk assets during a recession. The counter argument being that, if Bitcoin is viewed as digital gold, then maybe it would be considered a safe haven. And I also think, a recession, the impact of the recession would obviously also be dependent on when it occurs. If Bitcoin has reached an annual volatility of 5% or something, at least the way I defined it, then it might not seem as dangerous as if we're seeing 80% losses in a single year or something. So keep that in mind. We also have, we're working on getting these charts live on a website so that people can follow along. And you can find that at intothecryptocharts.com. And so far we really only have a few graphs up, and the load time is slow. We're in beta phase, so feel free to check it out. And you can bookmark it and then just check it periodically as we add more stuff and work on the back end and get things moving a bit quicker. So be sure to check that out. And then we have a section on the total cryptocurrency market cap where we look at Bitcoin dominance. We look at these lengthening cycles and how the Bitcoin dominance might behave in the future. Whether, we were in this downtrend channel and we noted that it really saw shifts when the Bitcoin held the 20-week moving average as support during the last bull market, when it reached its previous all-time high, and then at the end of the bull run were the three primary times that the Bitcoin dominance went down. We're not saying it has to happen that way again, but it's just something to consider. And then, of course, we looked at a lot of different Twitter polls. So if you want to take place in some of these polls and just follow the content I'm producing, follow me on Twitter. I'm at IntoCryptoverse, so just IntoCryptoverse. And you can see some of the polls. So here's one where what do you think will define cryptocurrency during 2020? So 55% of people said accumulation, 31% said bull market, and then 13 to 14% said bear market. So this is kind of what people think, and this was out of 418 votes. We had other polls. For instance, we had, when do you think Bitcoin will hit 100K? And remember, one of the shortcomings here is that we only gave 4 options. So, it's possible that people would have chosen something else had I offered more options. But the funny thing is, I offered these 4 years, and they're actually equally split. The one year that was a little bit more than a quarter was 2022, with 27.6% of the vote. The other ones all had less than 25%. Here's one: how high do you think Bitcoin will go during the next bull market? So around 38% of people thought around 100K. $50,000 was chosen by 31%. It's interesting because 31% of people chose 50K, and then 10% chose 500K. So there's actually, basically there were 3 times the amount of people that chose 50,000 than 500,000. But there still are a significant number of people think that we would go an order of magnitude higher than what other people think. So it's kind of interesting to see the spread there. This one was interesting. So this was what do you think are the most likely dates for the next 3 peaks in the cryptocurrency market cycle? So clearly, maybe you would have agreed with the first date, but maybe you didn't agree with the second one. Whatever. Just it is what it is. The first one is assuming every 4 years. 42.4% of people think that we're on this 4-year schedule. This one would have been, so 34% think 2022, 2028, 2035, so basically lengthening cycles. And then these are just getting longer and longer. So essentially, it's about half of people, almost half of people think it's a 4-year cycle, and then the other half of people think it's a lengthening cycle, and then the disagreement is just what is the nature of that lengthening cycle, like at what rate is it lengthening. We looked at what will the Bitcoin dominance get to, the lowest it'll get in the next bull run at the peak, and most 43.5% of people said 0.4, which is not that far from what it was during the last one. And you can continue to read these charts. This one was, what year will Bitcoin reach its previous all-time high, around $20,000? So actually 40% of people think 2020. Which to me actually kind of surprises me. And the reason it surprises me is because if you operate on the 4-year schedule, you can note that if you look back 4 years, Bitcoin didn't reach its previous all-time high until Q1 of 2017. So if the 4-year cycle were to repeat more or less the same way, then we wouldn't expect it to reach its all-time high until Q1 of 2021. Even despite this, people think it's going to reach its all-time high quicker than it had in the past. So 40% of people see it hitting 20K this year, and 36% of people say in 2021, and then 10% 2022, and 12% 2023. Here's one that kind of is going off one of the charts I made earlier. So what decade will be accompanied with Bitcoin price stabilization? So 43% of people said the 2030s. And then 17.5% said the 2020s, and then I'll let you continue to read these. And then here's just a flat-out question: is Bitcoin on a 4-year cycle? 40% of people say yes, 23.6% of people say no, and then 36% of people say there's insufficient data. So that's why I mentioned earlier. I know basically half of people do think we're on a 4-year cycle, and then the other half either think we're not on a 4-year cycle or they're just not sure. There's just not enough evidence to say one way or another. So I do make some general conclusions, and then I do advertise my social media channels. If you guys like this content, please subscribe, turn your notifications on, and like the video, and feel free to check out my Twitter account, my YouTube. Well, this is my YouTube, but subscribe to my YouTube. I do have a Telegram channel that I'm pretty active on. You can ask questions. We have an announcements channel that is just me talking, no one else. We have a Discord channel, a Facebook, and then of course, if you want to show support for the content and get a little bit more than what's being put out there for free, then you can check out Patreon. I hope you guys appreciate this report. Again, look out for Ethereum letters sometime next month. I'm not going to say exactly when it's going to come out next month, but look for at least an abbreviated version of it next month. And if you want the full version, just check out the Patreon site. All right, guys, that's it for this time. Until next time, bye.